Hello everyone and welcome to today's session. So today what we are going to do, we are going to discuss the rest of this chapter 7 and then we'll move to the chapter 8. Okay. But before that, I would like to ask a question to everyone over here is, have you gone through the lectures? That is an important question that I want to ask. Have you gone through the lectures that are hosted on the website, on the portal for chapter 7? Yes, no? Okay, I hope you guys have gone through the lectures. If no, then I would suggest that after this lecture, please go through that detailed lectures which are already there uploaded on the portal. These are kind of a complementary or supplementary lectures over those lectures because we are discussing in a summary way. We will be discussing question answers, but in those lectures, I have already explained all the standards, all the chapter in detail. So that is a must watch. Please make sure that you go through those lectures and that is very much necessary. Okay. Now, proceeding ahead with today's session. So today what we are going to do, we are going to cover essay 701, key audit matters, CAM. Okay. Essay 710 and essay 720. And then we'll go to the essay 800 series, which is for the first time you guys will be seeing. Okay. Now, I will quickly provide a background about essay 701 and other essays that we are going to discuss today in chapter 7 and then question answers for that particular section and then to the next chapter. So this is how we will be proceeding. During the session, if you guys have any doubt, you can write it down on the chat. Okay. Or if you guys are through portal watching live, you can also use the POS app to submit your replies or questions. But I would suggest to take more part and to be participative and to be, also attend on the live Zoom call. That is very much, helpful and you will be able to ask questions directly. Okay. So, essay 701, key audit matters. Okay. Communicating key audit matters in the independence direct auditor's report. Now, here, my question to all of you guys is, this key audit matters. What do you mean by key audit matters? What are these key audit matters? Anyone can tell me what is key audit matter? Anyone? Very good, Abrakresh. Yes. Okay, so basically, when I talk about key audit matters, okay, they are the matters that in my auditor's judgment were of most significance in the audit of financial statement of the current period. Okay, now remember, they were of the most significance. Okay, and then I determined that, okay, based on the significance that I have already communicated the matters to those charged with governance. From that, I identify a key audit matter. Now, when can I say, oh, it was a most significant matter? I can say when that it contains the area of higher assessed risk of material misstatement. Okay, areas of higher assessed risk of material misstatement. And remember this particular term. Do not alter this term. That areas of higher assessed risk of material misstatement. Some people write it areas of higher risk. No, use the proper term that is there. Assessed risk of material misstatement. Higher assessed risk of material misstatement. Okay. Then areas involving significant auditor's judgment. Okay. Where there is a significant auditor's judgment, that particular area, okay, it can also be, classified as a key audit matter. Like, for example, you have a judgment, you have an estimate. So, judgment or estimate, but that should be significant. then any transaction or any event that has a significant impact on your financial statement, or you can say that okay, significant transactions or events that have occurred during the audit period, events and transactions that are significant and have occurred during the audit period. Now these could be the areas which could be significant from my auditor's viewpoint, that they could be a key audit matter. Are you getting my point? So if I think, okay, this is a significant area or significant judgment, significant event, areas of higher risk of assessment, risk of material statement, in that case, yes, these could be a key audit matter. Okay. Any doubt till now? But always remember that these should be the key audit matter should be one of the matter you have already reported to the those charged with governance. So if you have not reported the matter to those charged with governance, then that cannot be a key audit matter. Now, why it is so? Can anyone tell me why that if I have not reported a matter to those charged with governance, it cannot be a key audit matter? What is the reason behind that? Anyone? Can anyone tell me what is the reason for that? Why it is necessary that the key audit matter to be, it should be from the matters which are communicated with those charged with governance? Because if not reported, how can be reported as scam? But why? Why it is necessary to report key audit matter in advance to those charged with governance? Why it is necessary? What is the reason behind it? Okay, let's say I don't want to report key audit matters to those charged with governance. Why it is necessary that I should report? It's like index of book. Okay. Okay, Brakesh. Anyone else? We read everything. Okay, this is necessary, but why? That why is important to understand. And most of us, forget to understand or to, question on that why. The reason of this lies in SA 260. Can anyone tell me the name of SA 260? Can anyone tell me the name of SA 260? No? Okay. SA 260, communicating with those charged with governance. Okay, it's all about communication. So SA 260 talks about communicating with those charged with governance. Now, in SA 260, there is a requirement that what matters are required to be communicated. And one such matter is if you have identified significant difficulties or if you have encountered any significant difficulties. Another point is if there is a significant matters arising during the audit, those things are required to be reported to those charged with governance. So as per SA 260, you are required to report these areas. And if you have not reported, means these areas are not significant. Are you getting my point? So this particular areas are required to be reported as key audit matters or instead of key audit matters as only matters under SA 260. If you report this matter under SA 260, then only it will be counted as a significant matter, otherwise not. And as a result, the matter should be from, the things which are communicated to those charges governance. Clear till now? Any doubt? Why it has to be one of the matters which from the matters that are communicated to those charges governance? Understand the logic. One side 260 days that okay, please report all the significant matters. And if you have not reported any matter, means that is not significant. On second hand, CAM says that okay, whatever significant matters you have reported, select some matters from that as a key audit matter based on the criteria. Now, if some matters are not reported to those charged with governance, they means they are not key audit matters, significant matters, and hence, if it is not a significant matter, it cannot be a key audit. Clear? Any doubt? Okay. So, once we decide what is a key audit matter, there are certain things that we need to understand that, okay, for this purpose, key audit matter should not be used. For, okay, I'll come, Abrakesh, on the mandatory part of the SA 701 in a while, don't worry. So, I was talking about for what purpose key audit matter section of the audit report should not be used. Number one, it is not a substitute to express a modified opinion. And when I talk about modified opinion, it is qualification, adverse, or disclaimer of opinion as per SA 705. No, you cannot use key audit matter to express a modified opinion. That is not allowed. So if you have a qualification, you need to report in a qualification part, not in key audit matters. Okay. So CAM should not be used for expressing a modified opinion. Number one. Expressing going concern related issues. Remember SA 570, where we discussed about going concern related issues. So key audit matters should not be used for that also. SA 570. And key audit matters should not also be used to provide a separate opinion on individual matters. You will see, in SA 810, when we will talk about issuing an opinion, okay, on a separate financial statement, specific element of a financial statement or an account, okay, or single financial statement. So if you are using key audit matter to do this, not allowed. So SA 705, 570, and 810 are not allowed with respect to key audit matters. You cannot club both of them. So 701 and remember 570, if you reverse 570, it will become 705, okay, and 810 should not be used as together. Remember that. Now coming to the applicability part of a key audit matter. So the question is that if I have reported matters which are significant under SA 260, then is SA 701 directly applicable to me or to the audit? So it is not the case. As of today, the SA applies to the audit of complete sets of general purpose financial statement of listed entities. Okay. So this particular essay applies to only audit of complete sets of general purpose financial statement of listed entities. So the focus is on two things. Number one, complete set and of listed entities. These two areas are important because if you are issuing an opinion on a which is not a complete set of financial statement, SA 701 will not be applicable. Even if the entity is not listed, SA 701 will not be applicable. Okay. And SA 701 should not be used when you are disclaiming an opinion. If you are disclaiming an opinion on financial statements, SS 705 prohibits the auditor from communicating key audit matters. Now, the reason because the logic behind is that when I use a disclaimer of opinion, when I don't have information, I don't have audit evidence, I don't have details to support my opinion. I cannot say that okay, everything is true and fair. Books of accounts are in confirmation with the applicable financial reporting framework, or the financial statements are in confirmation with applicable financial reporting framework. I don't have that much evidence to comment on that. And the missing evidence has the impact of the missing evidence is material and pervasive both. As a result, if I don't have the evidence, then how can I identify that what could be a key audit matter or what could be the significant matter? Hence, SA 705 says that when disclaimer of opinion, do not use 701. So, disclaimer of opinion, so not use not use SA 701. Clear? So if you want to learn in short form, it is do not use SA 701 means in disclaimer of opinion, DO is a disclaimer of opinion. For that, not use SA 701. So you can remember in that way. Abrakesh, if one scam is applied, okay, key audit matters is applied or SA 701 is applicable. In rare cases, there will be a scenario, the key audit, the SA 701 will not be applicable unless, it is a disclaimer of opinion or you are not able to identify any key audit matter. So let's say, for example, once an entity becomes listed, hardly an entity goes back and becomes a private limited. Okay, it will come out of the purview of listed entity. So in that case, there are rare chances that, once it was applied and then we are reversing it back. Any doubt with respect to SA 701? Any doubt? Now, the last part of SA 701 is what to report in CAM. We understood what is CAM. We understood when to report. We understood when not to report. But what to report. Okay. So when is completed, how and what to report. When I talk about how, a separate section should be there. So if I talk about how, those separate sections should be there in an audit report. That is how you are supposed to report key audit matters. But what to report? That should, for a key audit matter, you are required to report, first of all, the description of the matter, like what matter you are thinking as a significant, the detail or the description of the matter, okay, that you are thinking, okay, it's a significant. And then how you addressed that matter in your audit, how that matter was addressed in your audit. two things: description and how matter was addressed. Now understand why this second point is required. The second point is required if, let's say for example, you are saying significant matter, but you were not able to address, then it becomes a qualification. Significant matter you are not able to address becomes a qualification. That's why it's necessary to disclose that, okay, this is not a qualification and we addressed this matter by this way. So this falls under the bucket of what you need to report. Clear? Any doubt? Any doubt, guys? Okay. At what stage it is to be placed in an audit report? Very good question. Remember in my last lecture when I was discussing about SS 700, I provided you a particular, short form that, okay, what should be the content of your audit report. Does anyone remember that from the last lecture? I'll show you. Remember TAAB, GKO, MRAR, CCSPD. In that, you have a GKO, okay, that includes going concern, CAM, and other information. So this is here a CAM for the listed entities placed as per SS 701. So under the GKO, first title addressee, opinion, basis of opinion, GKO is a going concern, CAM, other matters, MRAR is a management responsibility, auditor's responsibility, CC is respect to your communicating the matters and with respect to component audited by other auditors, and then signature, place, and date. Clear? So this is how, and this is where you need to report key audit matters. Any doubt? Nope. Okay. If no doubts, let's proceed further to the next essay for today. That is essay 710. Very important essay. Comparative informations. Okay. Comparative information, which includes your corresponding figures and comparative financial statement. Now, when I talk about essay 701 or 710, comparative information, what is the first thing that comes in your mind? Can anyone tell me what is the first thing that comes in your mind when I talk about comparative information? Anyone? Comparison with earlier period, correct? Okay, I'll give one example. Let's say, for example, this is an audit report. Okay, this is a balance sheet basically. Okay, equities and liabilities. You have for FY24, you have FY23. All the numbers are there. Okay, now all the things are mentioned. Now, my question is, when an auditor issues the audit report, does that audit report cover this part, FY23-24, or both? So, option A is that FY24 only, B, FY23 only, and C is both. So, when a audit report is issued. So audit report covers which period? Simple. That is the question I have. And you have options over here. Which period is covered by audit report? Whether it is FY24 only, whether it is FY23 only, or whether it is both. Anyone? So what period is covered by audit report? Simple. Abrakesh, both or A? Like I have received two answers from your side. So do you say both or A? Both. Okay. So you are saying it covers FY24 and FY23 both. Okay. Understood. Okay. Now that is the different and the area that we need to understand. Our audit report for the current financial year only covers the current year, not the FY23, not both. It only talks about the opinion is only on my FY24. You do not issue an opinion on the comparatives which are there in your financial statement. No. Have you ever seen that you are mentioning 2 years in your audit report that, okay, for the financial year 23 and for the financial year 24, we are issuing opinion? No. You only issue an opinion for financial year 24, that is the current for which you are doing an audit. This one. For this, you do perform audit procedures, but those audit procedures are based on SA 710. And this particular comparators, okay, are known as corresponding figures. These are known as the corresponding figures because I am not going to issue my opinion on them. No, my opinion is not on these numbers. These numbers are there as a corresponding figures. I have some limited responsibility towards the corresponding figures, but I'm not going to issue opinion on them. And for that only, we have a SA 710 that talks about comparative information, which includes my corresponding figures and the comparative financial statement. Now, when a auditor issues opinion on the comparative information also. So if I issue an opinion on both, let's say FY24, FY23 on both in single audit report. If in a single audit report, if I issue opinion on both of the numbers together, then I will call it as this particular FY23 numbers as comparative financial statement. If opinion is there, then it will become a comparative financial statement. If opinion is not there, then it is a corresponding figure. Usually, for all of our audit reports, which are general purpose or based on for general purpose financial statement, there is a corresponding figures only, no comparative financial statement. Now, when the comparative financial statement comes into the picture, remember in DRHP, you auditors at times have to issue opinion on the 3 years, last 3 years, last 5 years restated financial statement. In those cases, which are specific scenarios where the auditor is required to issue opinion on multiple years together, either because of the listing requirements, either because of some XYZ reason, in those cases, I could call that as a comparative financial statement. So in India, generally, for the financial reporting that we do at the year end, is for we use the corresponding figures approach, not the comparative financial statement approach. Clear? So you got the understanding between the corresponding figures and the comparative financial statement. Now, when I talk about comparative information, that includes both. Okay. So comparative information, CI includes corresponding figures plus comparative financial statement, both. So comparative information is a common term for both, which includes my corresponding figures and comparative financial statement. Now, the essay says that, okay, the essay says that what is the responsibility of the auditor when it comes to corresponding comparative information, that is both corresponding figures plus comparative financial statement, or when it is only corresponding figures, or when it is only comparative financial statement. So what is the requirement and the responsibility of the auditor? So when it comes to the requirement with respect to both, okay, determine whether the applicable financial reporting framework, okay, what it requires to you to disclose. What is the requirement of applicable financial reporting framework with respect to comparative information? So you need to understand the requirement of applicable financial reporting framework. Then you need to check with the previous year information and other information disclosed, whether the number are matching or not. So numbers which were reported in previous year or other information if anywhere else with respect to the previous year disclosed. So agree with the amount in previous year. Okay. Not only with the numbers, but also check with the accounting policies. If the accounting policies are also reflected, appropriately. For example, last year the accounting policies were used something else, and now you are reporting that okay, last year some other accounting policy was issued or for followed. So check for the accounting policy also. And if there is any material misstatement in comparative information, which includes both, then you need to perform additional procedures. If any material misstatement, then perform additional procedures to obtain sufficient and appropriate audit evidence. You need to ask for the written representation from the management for all the periods, including the prior period item disclosed in the P&L. So obtain management representation for all the periods. This is the requirement for comparative information. Any doubt? Okay. Now the second part of the essay talks about what is the requirement when it is corresponding figures. Means I am not going to issue opinion on these numbers. These are the comparatives, and these are just for the comparison. But I'm not going to issue opinion. So first of all, if you are not going to issue opinion, then it becomes a corresponding figure. So I'm not going to issue opinion. Okay. That is perfectly fine. Then the essay talks about, okay, if you are not going to issue opinion, that is perfectly fine. But there are certain scenarios where you need to talk about the corresponding figures in your opinion. So it provides that, okay, usually you are not required to issue opinion on that. But in certain scenarios, you may mention the corresponding figures in your opinion. And what are those scenarios? Number one, that there was a modification or misstatement in previous year, which is still not resolved, and that is impacting your current year numbers. For example, previous year, fixed asset was misstated. As a result, you have an opening misstatement, you have a depreciation wrong, and you have a closing misstatement. So in that case, you can refer to the previous year number in your opinion that okay, this previous year number or corresponding figure is not appropriate. There is a misstatement which is still not resolved. Okay. So if there is a unresolved misstatement or modification which has an effect or possible effect on your current year numbers and which is material, then you can do that. You can refer the corresponding figure in your opinion. Okay. If there was an material misstatement in previous year financial statement on which unmodified opinion was issued, means you did not identify any misstatement in last year, but there was a misstatement. So somehow it got missed. And now, when you are doing the current year audit, you identified that misstatement. In that case, also, you can refer to the corresponding figures in your current year audit report. So, if the misstatement exists in the previous year financial statement, for which you issued an unmodified opinion that you were not aware at that particular point in time, or someone, if other auditor was there, he was not aware that there is a misstatement and he issued clean report. In that case, okay, understand the, what your financial reporting framework says that what to do in that scenario. And then you can issue a qualified or adverse opinion by providing an opinion on your corresponding figure. Are you with me on this? Any doubt? Any doubt? Okay. And the last part is if the, one more thing is if previous year financial statement were audited by some other auditor or either were not audited, then you are required to specify the same in other matter paragraph. So in other matter paragraph, specify the detail that last year financial statements were audited by some other auditor or were not audited at all. And when I talk about SA 706 key audit matter, SA 706 talks about other matter paragraph, and other matter is to be used when it is a matter of audit report or auditor's responsibility. In this case, this is the matter for the audit report and the audit, and that's why I need to use other matter paragraph. Clear? Now, coming to the last part is a comparative financial statement. In that case, you are issuing an opinion on previous years. When I talk about comparative financial statement, opinion is being issued on previous year. And that is a different opinion than the current year. Means you are issuing two opinions. Okay. And you are mentioning two different financial statement in your audit report. That okay, I am issuing an opinion on the balance sheet as it on 31st March 24 and 31st March 23. Kind of that way. In that case, when you are issuing an opinion, all other assets will be applicable. Like you are doing an audit and that's why you are issuing an opinion and everything will be applicable. So there is no, in that case, exceptions. It is pretty much straightforward. Apply all the assets that are relevant and applicable to that scenario. Now the question comes is, what if in the previous year also an opinion was issued and now also you are again issuing an opinion? Means two opinions on same financial statement. Two opinions on same financial statement. And the best part is, let's say for example, I'll show you one example. Let's say Mr. X was auditor in FY 22-23, and he issued following opinion. Okay, for FY 22-23, he issued unmodified opinion. Perfectly fine, no issue. Now, Mr. Y is appointed auditor in FY 23-24, and for purpose of DRHP, that is a draft ready hearing prospectus, he has to issue opinion on FY opinion on FY 22-23, FY 23-24. But what, based on his audit, he wants to issue a modified opinion for 22-23 and unmodified for 23-24. Now the problem is you already have an opinion for 22-23 which is unmodified. Now this auditor wants to issue another opinion on 22-23 as a modified. Can he do that? Two separate opinions on same set of financial statements. Is it possible to do that? Anyone, guys? Anyone? Okay. So what is the responsibility of Mr. Y over here? Responsibility. What will be his responsibility? Quickly, guys. So here the responsibility of Mr. Y will be, okay, ask those charged with governance to communicate with Mr. X and inform him that I am issuing modified opinion for this particular reason. Inform him the reason for different opinion and ask him to modify the report if possible. So Mr. X has to reach out to the management of those charged with governance and ask them, okay, management, please communicate to the previous auditor that, okay, there is a change in the audit report. He missed out something and now he needs to amend and issue new audit report on the amended or new financial statement if you are allowed to do so by law. If law allows to do so, then please do it. Okay, modify the opinion, ask him to change the audit report. You please change the financial statement and accordingly I will proceed ahead. Are you getting my point? In that case, the current year auditor has a responsibility, okay, and ask that, if he is issuing a different opinion, then communicate with the management and those type governance and request previous year auditor that he should be informed about different opinion, amend the financial statement and audit report for the previous year, and if he's doing so, that he's amending the financial statement and audit report for the previous year, then you are not required to issue again a new opinion because, right now he's going to issue a new opinion. So your matter will be solved. Clear? Any doubts? So that was SA 701. comparative information, corresponding figures plus comparative financial statement. Any doubt, guys? So the last essay for chapter 7 is essay 720. Auditor's responsibility relating to other information. Now, first understand what is other information. Other information is the information contained in the annual report, okay, or preliminary announcement letters or preliminary letters containing financial information, okay. Basically, when I talk about this particular area, like annual report, in that case, that annual report contains a lot of information other than the audited financial statement. But if some document, okay, which doesn't have your audit report, okay, and the management is only sharing the numbers in that particular document or providing some briefings, that will not be counted as an other information. So basically, I can conclude that, okay, if it is an annual report, it will be other information because there will be a audited financial statement and audit report attached in that. But if there are other documents like preliminary announcement documents of financial information or securities offering documents, okay, which have a different format or different requirements with respect to law or regulation, or if there are documents which doesn't contain your audit report or financial statement, then that is not known as a other information. Clear? So only annual report and information contained, whether financial or non-financial, in annual report is your other information. I hope I'm clear. Now, SA 720 talks about what is the auditor's responsibility with respect to other information. Again, so other information means the information which is there in your annual report. If there is any other document other than annual report, it will not be counted as another information. For example, before issuing annual report, companies issues earnings call, some summary document or financial statement snapshot. Those are not other information. Or DRHP, RHP, or any other document for security listing, that is also not other information. Other information, only financial, non-financial information in annual report is your other information. Now, what is the responsibility of auditor with respect to other information? Sorry. So, the responsibility of the auditor is pretty simple, pretty straightforward. Ask management to share and provide the other information, means draft and final annual report to you. Once you receive final and draft or draft annual report, okay, then what you need to do is compare the details which is there in the annual report with your financial statement. Now, why I need to compare the detail? To identify material inconsistency. Means, let's say for example, the sales figure somewhere in the annual report is written 100 crores, but your financial statement talks about that the sales for the current period was only 85 crores. There's a material inconsistency between both numbers. So identify that material inconsistency between the other information and financial statement. Okay. And understand whether other information is wrong or financial statement is wrong. Okay. So if Auditor understands that, okay, material misstatement is there in the other information. In that case, please ask management to correct the other information. And if management refuses to do so, communicate to those charged with governance. Simple. Okay. And still, if the material misstatement is there, then in your audit report, there is a other information paragraph, not the other matter, but other information. Remember, there are other matter paragraph is different, other information paragraph is different. So in your other information paragraph, report this particular material misstatement. Clear? Now, if you say that, okay, the misstatement in the audit report, okay, then what is required to be done? In that case, okay, if you identify misstatement in the audit report before issuing the audit report, or misstatement in the financial statements before issuing the audit report, go and perform additional procedures. Check whether whether how much materially misstated the financial statement are. And once you identify, okay, this is the reason that financial statement are materially misstated, I ask the management to rectify. If management is unable to rectify, then modify your opinion. Okay, you need to take appropriate action, like, modifying the opinion and asking the management to rectify the financial statement if possible. Now, what if you identify the issue after issuing the audit report? Let's say audit report has been issued. Now management has came up to you, okay, this is a draft annual report, because usually annual report goes after audit report. So management now came to you, okay, this is a draft or final annual report, go through it. And when you are going through it, you understood, okay, I have issued the opinion and there is a issue in the financial statement. In that case, consider, like, okay, what the alternate options available to you, like, what are the other options available to you with respect to modifying the audit report. Is it possible to modify the audit report? It is possible to modify the financial statement now. If yes, then you need to take appropriate action. Clear? Any doubt till now? So that is pretty much, a summary of SA 720. Pretty straightforward. There is nothing much difficult on this part. Any doubt? No? Should we take some more questions on this particular topic? Okay. Let's take some question on this. Yesterday we discussed some question on chapter 7. Let's continue and discuss some more questions. Okay. During the audit of XYZ Limited, the audit team identified the inventory was valued at cost instead of cost or NRV, whichever is less. As a result, inventory was valued higher by 4,35,000. When inquired with the management agreed with respect to the mistake. However, the management denied changing the same in the financial statement, as unaudited financial statements were already shared with the banks and financial institutions for the purpose of financing active facilities. Moreover, management requests audit teams to disclose the same matter in their audit report as an additional disclosure instead of changing the financial statement. Management also agreed to provide written representations in respect of the said matter. Okay. Hence, the audit team finalized to disclose the said issue as a key audit matter in the audit report, as management agreed to their mistake However, due to some limitation, they are not able to change the financial statements. Kindly guide the audit team by selecting the option below. But before we go to the options, you tell me what is the correct way of reporting this. Whether this is the correct way. If yes, then why? If no, then why? And don't think that answer will always be no. Don't think that answer will always be no. Answer could be yes also, but you need to think whether it's a yes or no. Come on, guys. Okay. Abrakesh, yes, good. Anyone else? Anyone else? Okay. So if you say yes, like Abrakesh, if you are saying yes, then why? What is the reason for the yes? What is the reason why you are saying yes to this one? Any specific reason? Let's assume this is material. That's why I use the term over here is material misstatement. So let's assume this is a material. Now, would your answer be different if I say this is a material misstatement? Would your answer be different if I say this is a material misstatement? Yes, no, anyone? Okay. So, in this case, understand one thing. If there is a material misstatement, FS are required to be amended. If management is not amending the FS, modified opinion is required to be issued. Simple. Whatever, XYZ scenario it is there that they have issued to the bank, to XYZ person, or to whomsoever. Either rectify the material misstatement or auditor should issue a modified opinion. Now, using CAM for modification is not allowed. Remember, using CAM, using 701 for, remember, 570, 705, and 810 is not allowed. Modification falls under 705. So you cannot use CAM for modification. And hence, in this case, reporting the matter as a key audit matter is not correct approach. Auditors should not report this matter as a key audit matter. This should be reported as a qualification or a modification. Clear? Any doubt? Any doubt? Okay, no doubt. There is one more question on the similar lines. Let's see that one. During the course of audit of ABC Limited, the audit team identified misstatement of rupees 5 lakhs in the valuation of inventory. The total value of inventory at the year end was rupees 1 crore 50 lakhs and the performance materiality was 4 lakh 50,000. Okay. After evaluation of the misstatement, the audit team concluded that the misstatement are material but not pervasive in nature. Hence, the audit team decided to disclose the information regarding the misstatement of valuation of inventory as the emphasis of matter in the audit report, as the audit team concluded that this matter requires attention of the user and is fundamental to the understanding of the audit report. Kindly guide the audit team. So, what do you think in this case? You have materiality, you have misstatement, you have reporting. Is the reporting correct or not? Pay attention to the materiality levels. A hint I can give you. Pay attention to the materiality levels. Come on, guys, quickly. What do you think in this scenario? Material misstatement is there or not? The reporting done by auditor is appropriate or not? Whether the matter requires attention of user and is fundamental to the understanding of audit? Yes or no? What should be the reporting? What should be the reporting, guys? Okay. So, okay, Abrakesh, yes. Anyone else? Anyone else? Okay. If uh, in this case, okay, for example, in this case, I have already given this information. So if in the question information is already given, do not reassume the information. So here information is the misstatement are material but not pervasive in nature. So something is already given, so do not reassume it. First of all, use this information. Okay, if the information is given, then use the same information. So if the misstatement are material but not pervasive, means there is a material mistake. And for that, you need modification in audit report. That is for sure. Now, instead of modification, the team used emphasis of matter paragraph, which is not correct. Reason because you cannot use EOM for modified opinion. Remember, EOM cannot be used for MO. Simple. EOM should not be used for this reverse. This is MO. No, this should not be used for modified opinion. That is incorrect. If you use emphasis of matter paragraph for modified opinion, then it's an issue. That is not allowed. Emphasis of matter paragraph is for the matters which requires attention of the user and are fundamental to the user understanding of the financial statement. Fundamental to the user understanding of the financial statement, not of the audit report. Remember, matter already present in the financial statement, existing matter. So if the matter is already existing in the financial statement, and if it is related something to the financial statement where you want to draw users attention, then only EOM paragraph is used, not for the modification. Clear? So in this case, using EOM is not correct. Any doubt? Okay. So clear till now, till this particular point? There is one more good question that let's take that one also. Gnome Limited is listed on BSE in India. Post audit rotation, ABC and company have been appointed as a statutory auditors for Gnome Limited. The company has a pending litigation in respect of contraventions of FEMA regulations with respect to the FDI matter, which has been going on for a long time now, and the exposure of the company towards the litigation is very significant. ABC and company got the exposure of the case evaluated by auditors legal expert specifically appointed to share views on the exposure of the company. The evaluation by the expert would reveal that the exposure would would be moderate with a probability of 50%. So the what expert is saying is that exposure would be moderate with a probability of 50%. Okay. Now, as per the requirement of applicable financial reporting framework, moderate exposures with a possible impact of 50% is required to be disclosed as a financial statement in as a liability instead of contingent liability. So, as per applicable financial reporting framework, if the possible impact is 50% or more, that's the same is required to be reported as a liability instead of contingent liability. Fine. The company has been disclosing this as a contingent liability in previous year. However, in the current year, at the request of the auditor, the company booked a provision and disclosed the same as a liability, but denied to change the previous year disclosures. But denied changing the previous year disclosures. Perfectly fine. As a result, there was a material inconsistency in the previous year period corresponding information. So there was a material inconsistency. As per SA 710, auditor is not required to issue opinion on the corresponding figures of the previous year. In light of the same, ABC and company are of the view that this is a significant matter that requires user attention by disclosing this in the financial statement and is of such importance that it is fundamental to the user understanding of the financial statement. Hence, this should be disclosed as the key audit matter in their report. Management is of the view that since this was not reported by previous year auditor as a liability and management has altered the disclosure in the current period, hence it should not be included in the new auditor's report as a key audit matter. Please suggest. Understand the whole matter. So there was a case that was supposed to be reported as a liability, but till now it was reported as a contingent liability. Okay. Now in the current year, management rectified the disclosure and reported as a liability. If management reported in the current year as a liability, okay, now the auditor is saying that I will report this matter in the key audit matter because it requires user attention. But the management is saying do not report into the key audit matter as I have already rectified the disclosure. So you are now required to report what is the correct responsibility of the auditor in this case, and what should be the correct reporting in this scenario. So correct reporting and responsibility of the auditor in the current scenario. Come on, guys. What should be done? Reporting in CAM, okay. Anyone else? Anyone else? Here, the corresponding figures have not been rectified. Remember, if I talk about the corresponding information, okay, there was a material inconsistency in the previous year corresponding information, and that is not been rectified still. So your comparatives are still, disclosing this matter as a contingent liability. Comparatives are still reporting this matter as a contingent liability. What should be your answer then? There was a liability which was reported till now as a contingent liability. Okay. In current year, management changed the reporting, okay, from contingent liability to liability, but corresponding figures are still same. Management is not changing the corresponding figures. Okay. As auditor is not required to issue opinion as per SA 710, so auditor is disclosing this matter in the key audit matter, because current year is all okay, previous year was not okay, and as because of that, uh, the auditor wants to issue a key audit matter, but management is saying do not issue a key audit matter because they have already rectified the error. So my options over here are, understand the option first, what you will do. One, modified opinion. Two, report into key audit matters. Third, I will report in other matter paragraph. Fourth, I will report in EOM para. What you will do out of this? Where you will report? It's purely on the reporting part. Purely on the reporting part. Okay. When I talk about this particular case, understand one thing. I have to issue a modified opinion, not the CAM, not the other matter paragraph, not EOM. And the reason I'll tell you why. Remember, I told you that auditor's opinion with respect to the corresponding uh, figures does not, reflect the corresponding figures. So auditor usually do not issue opinion on the corresponding figures unless there is an unresolved, okay, error or material misstatement in your previous year numbers. If there is a material misstatement exists in your previous financial period numbers, previous year financial statement on which unmodified opinion was issued. This example, unmodified opinion was issued. Now, okay, and now in the current case, you are, going through it and you are saying, okay, there is an issue. In that case, your audit report can refer to that, previous year number, corresponding figure in your opinion, and you can modify your opinion with respect to that. Remember? So, in the current case, your previous year number are misstated. So your previous year liability and contingent liability are not appropriately disclosed. As a result, you need to modify opinion with respect to previous year figures, and we call these previous year figures as a corresponding figures. Remember, corresponding figures as a part of my comparative information. So there is a material misstatement in the corresponding figures, and hence I will modify my opinion. Not issue CAM, not issue OM, or not EOM. But what if management, now let's say, okay, this is one of the scenario. Now let's move ahead with this scenario. And what if in the above case, management rectified the previous year corresponding figures also. Now there is no material misstatement in corresponding figures. How auditor should report this matter? One, modify with the opinion. Second, other matter paragraph. Third, emphasis of matter paragraph. Fourth, do not report. Simple. Extension of the previous case. What you will do? So management has rectified the current year plus previous year. There is now no material misstatement anywhere. How will you report the matter? As an auditor, how will you report the matter? Come on, guys. Anyone? Okay, Abrakesh, good. Anyone else? Anyone else, guys? If the participants, if you please can participate, and students, if you can answer on this, it will be really helpful. You will understand the concepts. You will able to grasp the things very easily. I request everyone to participate and answer on this question. So in the current case, okay, as the issue has been rectified in the previous year in the corresponding figures, and there is no material misstatement now either in the corresponding figures or in the current year figures. As a result, the question is, can I issue a modified opinion? Answer is no. So modified opinion is out of the picture. Now comes to the point of other matter, EOM and do not report. Other matter. Okay. If anything is related to audit, auditor's responsibility, or audit report, then I will use other matter. Otherwise, not. This is not related to audit, auditor's responsibility of audit report. So the other matter paragraph also out of the picture. Now EOM and do not report. See, this matter is already present in financial statement. Okay. And this requires user attention. Reason because there is a change in compared to last year. So not reporting will be incorrect and the correct reporting will be EOM paragraph. Because this requires user attention, because there is change in corresponding figures compared to previous year issued audit report. So if someone will go and if someone will compare the previous year audit report and the current year audit report, liabilities will not match. Because in previous year it was shown in the previous year audit report, it was shown in the contingent liability. In the current year, I changed the comparative figures, or the management changed the comparative figures, and they reported it as a liability. In that case, EOM paragraph is necessary to bring the user attention on this particular part. So EOM is the correct reporting. Clear? Any doubt with respect to this? Any doubt till now? No? If no doubt, let's take a quick 10-minute break. After the break, we'll gather back and continue the session. Let's take a quick 10-minute break. Okay, so uh, let's take few more questions and then we can proceed for the next chapter, chapter 8. So the question is, during the audit of ABC Limited for financial year ending 31st March 2020, the management agreed to provide a draft copy of annual return to the auditor before issuing the same for the verification purpose. After finalization of the audit, when the auditor received the draft copy of annual return, they identified that the direct expense related to X segment were not disclosed appropriately and they were misstated by rupees this much amount compared to the amount disclosed in the financial statement of the company. On identifying this, auditor inquired with the management about the reasons for the same and identified that there was a mistake in calculation of direct expense by management. However, management denied rectifying the said amount as it will impact the entire annual return and the ratios which were disclosed. As a result, auditor communicated this matter to those charged with governance and appropriate officer, okay, and requested them to rectify the same. However, those charged with governance also denied the said request. As a result, auditor decided to issue a modified opinion on the other information presented in annual report. You are requested to guide the auditor by selecting the appropriate option from below. But before we go to the option, you tell me what should be the correct way over here. Like there is an issue in the other information. Okay. There is a material inconsistency in other information. And management has denied rectifying the material inconsistency in other information. What do you say over here? So consider annual report, not annual return, annual report. There is a material inconsistency in other information. Management is not rectifying that material inconsistency. Auditor wants to modify the opinion. Come on, guys. So, Abrak, you are saying modified report as a separate mention and not on the other information. So, you are saying modified opinion basically. So, modified opinion. Okay. You are saying modified opinion. Anyone else? Anyone else? Your financial statement are correct. Your rest of the numbers are correct. There is a material inconsistency in other information that is not impacting your financial statement. So there is a material inconsistency in financial state in annual report. Okay, not in the financial statement. Financial statements are fine. Everything is good over there. How will you report this particular matter? Come on, guys, quickly. Okay, Abrakesh, you are saying that it should be reported as a EOM. Only segment reporting was incorrect. Okay, EOM matter. Okay, I'll give you an option. One, EOM matter. Second, other matter paragraph. Third, I'll modify my opinion. Fourth, other information. Now it should be easy, pretty much easy. Now it should be pretty much easy. Correct, Abrakesh? Yes. Anyone else? So I will not issue a EOM because it is not related to financial statements. I will not issue a other matter paragraph. The reason because this particular is not related to audit or audit report or auditor's responsibility. I will not modify my opinion because there is nothing in the financial statement wrong. Why should I modify my opinion? I will specify another information paragraph as per SA 720. As per SA 720, which requires me to report in other information paragraph that the auditor has concluded there is an uncorrected misstatement of the other information and a statement describing the uncorrected misstatement of the other information. So I will not issue a modified opinion, but I will only issue a statement in other information paragraph as per SA 720. Clear? Any doubt? Any doubt? No? Okay. Let's take one more question. Sujit and Company Chartered Accountants have been appointed statutory auditors of Anand Mills Limited for FY 22-23. The audit team had completed the audit and is in process of preparing the audit report. The management of the company has also prepared a draft annual report. While reviewing the company's draft annual report, the auditor observed a section that stated a decline in market prices for essential products compared to the previous year. Surprisingly, the financial statement indicated that company's profit margin has actually increased rather than they were showing declining. The audit manager discussed the issue with the firm's partner, who replied that the auditors are not responsible for disclosure made by management in annual report. Do you think the partner is correct in his approach to this issue? Discuss with reference to the relevant standard on auditing and auditor's duty with regard to reporting. So what should be the duty of the auditor here and what auditor should do with respect to the reporting? Come on, guys. So what do you think? What should be the auditor's duties over here and how he should report the matter? Come on, guys. What is the duty of the auditor in this case? Okay, Abrakesh, very good. What else? What auditor should do? You gave the answer, one of the answer is correct. What auditor should do? But before that, he is required to do something else. What should be that? Before your answer, that Abrakesh, before your answer, the auditor is required to do something else also. What would that be? And others, please, what should be the responsibility of the auditor in this case? Very good, Abrakesh. Yes. Anyone else? Absolutely correct, Abrakesh. So, as per SA 720, auditor is required to check for material inconsistency between other information and financial statement. Now, if there is a material inconsistency between other information and financial statement, what auditor is required to do? First of all, identify whether other information is incorrect or financial statement are incorrect. If financial statement are incorrect, in that case, perform additional audit procedures, or accordingly perform additional audit procedures, and uh, go in that particular direction, that perform additional procedures, gather sufficient and appropriate audit evidence, understand why there is an issue. Okay, and as a result, accordingly you decide. But if you say that other information is incorrect, in that case, communicate to those charged with governance, and accordingly, once you communicate with those charged with governance, ask them to rectify the other information. Once you ask them to rectify the other information, then in that case, whether they are rectifying, they are not rectifying, that will decide your reporting. So accordingly, auditor's duty is to verify whether there's a material inconsistency in other information or financial statement. And accordingly, auditor is required to take appropriate action. Clear till now? Any doubt? Any doubt, guys? Okay, let us take one more question. These questions will give you comfort and will help you to understand the topic in much more detail. So guys, the more questions we will practice, the more we'll understand the topic. But that is only true when there is a participation, and you, let's say for example, you are giving an answer. It might be correct, it might not be correct, but that evaluation process, that okay, you are giving an answer, then you are evaluating whether it is correct or not, what is the correct answer, checking with the correct answer. That is something will enhance the understanding about the topic. Okay, so one more question on the similar lines. Difficult Books Limited was engaged in manufacturing of active pharmaceutical ingredients. Due to change in laws and regulations, every company engaged in the manufacturing in active pharmaceutical ingredients would now require production license capacity license, which will restrict the production of companies. Management of the company assess the impact on the change in law over the financial position of the company and appropriately disclose the same in the financial statement. Audit team of the company evaluated management disclosure and found it appropriate and sufficient. However, considering the state matter as the most important and fundamental to the user understanding regarding the financial statement, the audit team decided to disclose the same in other matter paragraph. You, as an engagement partner of the audit team, kindly guide the team with respect to the reporting of the state matter in audit report. So there was a change in law. Okay, change in law was appropriately reported in financial statement. Now audit team want to bring user attention, so they are reporting the matter in other matter paragraph. You as an auditor, or like you are engagement partner, now decide whether this reporting is correct or not, or there should be something else like modification, going concern. Come on, guys. What do you think should be the appropriate way of reporting in this case? Waiting for your answer. Very good, Abhirakesh. Very good. And why so? Can you provide a reason for your answer? Can you provide the reason for your answer? Okay. Very good. Yes, absolutely correct. Anyone else? Viraj, Yugandhar, uh, VO2055. Anyone else? No? So basically, in the current scenario, see, there are two things. Number one, that there is some event has happened like change in laws which requires a disclosure in the financial statement, appropriate disclosure. Now the question is whether this is whether the disclosure done by management is sufficient. That information is already given in the question, that yes, management disclosure is appropriate and sufficient. So management disclosure was evaluated and it was found appropriate and sufficient. That is for sure. So there is no matter related to the qualifications. There is no requirement of the qualifications. Now the question arises where this particular point should be reported. Okay. Now the team wants to report in other matter paragraph. Understand one thing. Other matter paragraph is for audit, audit report, or auditor's responsibility. In this case, this is not related to the audit, audit report, or auditor's responsibility. And hence, other matter paragraph is not the appropriate way of reporting. Second, you may say EOM. Park EOM as of now, for now. Third, you may say other information. But other information is only for annual return information, annual report information, sorry. This is not in annual report. This is in your financial statement. And hence, other information is also incorrect. Now, fourth point. This is very important. Key audit matters. This is very important. Key audit matters. Should I report this as a key audit matter or EOM? If you understand the detail between both, then you have understand the concept appropriately. Will I report the matter as a key audit matter? Okay, Viraj. Okay, Abrakesh, very good. Now, to report this particular matter as a key audit matter, there are few conditions that are supposed to be met. Number one, significant matter. It should be significant matter, which includes higher risk assessment areas, which includes judgment, which includes significant transactions or events, plus that should be reported to those charged with governance. Now, if these conditions are satisfied, then yes, you can report the sale into a key audit matter. But the problem here is that it is nowhere specified that this is a high risk assessed area. This is a a high significant judgment area or a significant transaction or event during the year. There is a change in law. It is significant or not. It is not appropriately disclosed anywhere. I don't have a information in the question to say that okay, this matter has been reported to those charged with governance. But I do have a information that yes, I that matter is appropriately disclosed in the financial statement. Based on the given information, it is appropriate to say that this could not be a key audit matter. This will be EOM because I want to draw user attention to matter already disclosed in FS. So the correct answer would be EOM, not CAN. Understood? To report the matter as a CAN, there are certain conditions which are supposed to be completed, which are supposed to be fulfilled. Even the key audit matter reporting comes in case of a listed entities. Although it's a limited public limited company, whether it's a listed or not, I don't have information available in the question. So based on the available information, I would write the best suitable answer over here. Clear? Any doubt? Any doubt, guys, till now? No? Okay. If no further doubt, shall we proceed to the next topic? Okay. So the next topic or the next chapter is SA 800 series. SA 800 special considerations, with respect to special matters. Now, SA 800 talks about chapter 800 basically governs, chapter 8 governs SA 800 series, 800, 800 and, 5 and 810. 805 talks about audit of single financial statement or specific elements of accounts of financial statement. 810 talks about engagement to report summary financial statement. And 800 talks about audit of financial statement prepared in accordance with special purpose framework. Okay. Now, when we were talking about special purpose framework or chapter 8, so this particular essay, okay, SA 800 series, is kind of a nature of a introduction. That introduction has been discussed of SA 810 series, and on the basis of that, things will be there in the exam. So what is SA 800 series? And we'll go one by one. Starting with SA 800, special consideration with respect to audit of financial statement prepared in accordance with special purpose framework. So 800 discuss special purpose framework. Okay, special purpose framework. If your financial statement are prepared based on special purpose framework, then SA 800 is the correct essay that will be applied. Now, what is the objective of the essay here? The essay says that, okay, when an audit is happening for the financial statement which are prepared as per the special purpose framework, in that case, this essay is supposed to be, required to be followed. And the essay is pretty much simple. This is for the first time you might be seeing, but it is pretty much simple. Okay. This essay basically guides the auditor with respect to the matters on the acceptance of the engagement, planning and performance of the engagement, and forming on an opinion on the financial statement, but not on internal controls or effectiveness of the internal controls. Remember, this essay should not be used for the expressing opinion on the internal controls or effectiveness of the internal control. No, this essay will be used to understand whether the special purpose framework financial statement engagement should be accepted or not, how to do planning in those cases, and how to issue opinion. Okay. Now, when this type of assignment comes where there is a special purpose framework, now can anyone tell me what is a special purpose framework means? Like, how will I identify whether the financial statement are prepared based on special purpose framework? Can anyone tell me? How can I identify that, okay, this is a special purpose framework in this scenario? Okay, Abrakesh, good. Anyone? Okay, yes, very good, Abrakesh. Yes, absolutely correct. So special purpose framework is a scenario when financial statement, are designed to meet the financial information needs of the specific users. That means that let's say, for example, I'm preparing a financial statement for banks. I'm preparing financial statement for investors. I'm preparing financial statement, okay, to present outside India in some other gap. Let's say I'm preparing financial statement based on the sustainable reporting framework so that I can present outside India to investors. So that is a special purpose framework. Okay. Those special purpose frameworks, if I present financial statements according to that, and then if I receive an engagement to audit those financial statements, that will fall under SA 800. Are you getting my point? So preparing financial statement on cash basis instead of accrual. Okay, preparing financial statement, from the viewpoint of some regulators, some specific investors, some projects or something like that. So that will be known as a special purpose framework and financial statement based on special purpose framework. Usually, I have termed that particular, special purpose financial statement as a SPFS. But in exam, please do not use these abbreviations. Use the correct form and the correct full form of the term. That is a special purpose financial statement. So the first responsibility of the auditor when it comes to special purpose financial statement is to understand what framework it is used and whether the framework which is used is correct or not. Usually, We know that for companies it is Schedule 3 AS or Ind AS. Okay. For listed entity, it is Schedule 3 plus AS plus SEBI disclosure requirements, and together they make a applicable financial reporting framework. But in this case, we need to understand what is the purpose of the financial statement, why it is being prepared for bank, for investors, for sustainability reporting on cash basis, whatever the purpose is. So what is the purpose here? To whom I am going to, okay, to whom I am going to present my financial statement, the purpose, then the users. Who, for what purpose I am preparing? Who are the users of financial statement? And then what financial reporting framework I'm using. So these three things I am required to understand. First of all, when I take this engagement, that is known as a PUA, purpose, user, applicable financial reporting framework. Abrakesh, even specifying abbreviations in the bracket, I suggest to avoid that. Okay, so when it comes to accepting such engagement, understand PUA, that is purpose, user, and applicable financial reporting framework. Now, when you are planning the particular audit, what you need to do is understand, okay, that this is the audit. Okay, so this is the audit, and what is the requirement of the applicable financial reporting framework here? Understand the requirements of the applicable financial reporting framework, first of all. Based on that, identify which essays are applicable. So it is not the case that other essays will not be applicable. No, it is not. Essay 200, 210, okay, 220, 230, all will be applicable, but in a modified form. So application of essay will be there, but with a special consideration. Now, special consideration reason, because this is different kind of audit. So the essays are required to be modified when it comes, for example, materiality. Now, in this case, what is material is something depends upon the user, what user wants to see, what is material from the user's point of view, not the materiality that we decide as per SA 320. So there will be a tweaking or alteration required. Here you might not be required to communicate with those charged with governance. Here there might not be requirement to test internal controls, or there might not be no internal controls. In this case, understand the requirement and accordingly apply the essay which are already there. So applications of essay will be there, but based on special considerations. Okay. If the particular financial statement is prepared based on the provision of a contract, it happens that, okay, there is a contract with the investors. Now investors want a financial statement every year in a particular format for their review. They don't want the Schedule 3 financial statement for their review. No, they are asking company to prepare another type of financial statement for them over and above whatever they prepare for their compliances, to submit to the investors in a particular format, and that should be audited. Now, when it comes to the audit, you will be auditing and you will understand, okay, this is something is required to be prepared under the contract, provisions of the contract, which is there with my investors. So in that case, you need to understand and interpret the significant, part of the contract basis on which the preparation of the financial statement is based. And accordingly, you need to decide what the contract says and how it is required to be prepared, the financial statement. Now, when I'm required to form an opinion, okay, as I said, risk assessment will be there, SA 315, 330, SA 450, 500 series, 600 series, everything will be applicable. In the same way, SA 700 also will be applicable. In these kind of audit, SA 700 will also be applicable, but there will be tweak or there will be changes required. You need to appropriately disclose the applicable financial reporting framework when you are preparing your audit report. In your opinion paragraph, you are required to disclose like on what basis you have prepared your financial statement or the management has prepared the financial statement. So that describe the applicable financial reporting framework at the time of audit report or interpretation of the contract. If that is the case, if it is based on the contract, then interpretation of the contract. Provide the PUA in your audit report. What is the PUA? The purpose for preparing such financial statement, who are the intended users, and the applicable financial reporting framework. So PUA is also required to be given in your report. Understanding is also required. Reporting of PUA is also required. And a note is required to be, or issue a note that, these special purpose financial statement contain that information somewhere. So if the financial statement already has a section for PUA, like what is the purpose of financial statement, who are the intended users, what is the applicable financial reporting framework, that information is already contained in the financial statement, then just refer the note like, okay, the users are specified in this note, purpose is specified in this note, and the applicable financial reporting framework is specified in this note of the financial statement. Either refer to the note or specify in your report, whatever you are comfortable. Alert the readers that, okay, this is prepared as per the special purpose framework. And you can do it by EOM paragraph because this is related something to financial statement which is already disclosed over there. So use EOM paragraph and alert the readers that this financial statement is not a general financial statement, is prepared based on specific framework. So that is SA 800 special considerations in an audit of financial statement prepared in accordance with special purpose framework. Any doubt? Any doubt, guys? No? If no doubt, shall we proceed to the next essay? That is 805. Now, 805 talks about audit of single FS or specific element or accounts or item of financial statement. Okay. So, 805 talks about that when you are going to audit a single FS, in that case, this will be applicable. Now, what is a single FS? Can anyone tell me? Audit of single financial statement. What do you mean by single financial statement? What do you mean by single financial statement? Anyone? Audit of single financial statement. What do you mean by single financial statement? Or what do I mean by single financial statement over here? Anyone? No, Abrakesh. So what is the single financial statement? I want with an example. With example. No one? Okay. Tell me, when I talk about general purpose financial statement, what it includes? when I talk about general purpose financial statement, what it includes. Anyone? Pretty simple question. What will be included in my financial statement, general purpose financial statement? Okay, Viraj, yes, very good. What else? What will be included in my general purpose financial statement? Pretty simple question, straightforward. That should be, like no brainer. That's the first thing we learn. So, our general purpose financial statement contains statement of affairs, balance sheet, that is, statement of profit and loss account, statement of changes in equity, statement of cash flow, notes to accounts, significant accounting policies. Remember something, the basic general purpose financial statement I'm talking about. Now, instead of auditing the general purpose financial statement in every statement, if I only audit cash flow statement? I have received an assignment, please audit cash flow statement and issue opinion. Or audit only statement of changes in equity and issue opinion. Or audit only balance sheet, not P&L, not cash flow, not statement of changes in equity. How will you deal with that situation? That particular situation will fall under SA 805. That I'm doing audit of a single financial statement or specific element or accounts of a financial statement, not the general purpose financial statement, all the financial statements. No, I'm auditing a single part of it. Now, that single part can be only data also, whole asset side also, whole balance sheet also. It can be anything, but not the complete set. And if I'm doing so, that will be governed by SA 805. So if I'm auditing single financial statement, specific elements, in that case, this assay is required to be followed. However, this assay will not be applicable when reporting by a component auditor is done. So sometimes, it happens that, okay, if I'm doing, if I'm relying upon the report on component auditor, will that fall under the case of SA 805? No, component auditor will not fall under this case. Now, again, the considerations here or the things here is we need to understand what are the things we need to take care when we are accepting the engagement, how to plan and perform the audit, and how to form an opinion, except the opinion on the effectiveness of the internal controls. We are not going to report on the effectiveness of internal controls under this particular essay. No, because for that, some other essay is required to be used. Here, only opinion on the single financial statement, how to plan and perform the audit, acceptance of the engagement. That's it. Now, pretty straightforward. When I'm considering to accept the engagement, SA 200, 210, 220, all will be applicable. So SA 200 and other essays will apply. Straightforward. There is no doubt in that. So this essay does not override any, requirement of any other essay. However, over and above that, over and above the, application of the SA 200, 210, 220, we need to understand that whether the presentation of this standalone single financial statement will, will be able to provide that adequate disclosure to the users of that financial information. Let's say, for example, whether the users will be able to understand that, okay, this is single balance sheet only. This is single P&L only on which the audit is done. So is that disclosure sufficient, adequate from that point of view? And how the effect of material transactions and event is given impact on that particular single financial statement. So whether the effect of material and significant events have been appropriately given or not. So the things which we already do in a normal audit, the same is required to be repeated over here. Now, as I told you, we need to adopt all essay relevant to the audit. Let's say, for example, essay 320 required to be followed. SA 500 series required to be followed. Now, when I say relevant to the audit, it may not be a joint audit. So SA 299 might not be applicable. It not be a, I'm relying on the work of internal auditor. So accordingly, 610, 620 or I'm not hiring any expert. So those SA might not be applicable. I'm not relying upon the work of component audit. There might not be a subsidiary. So the whole 600 series might not be applicable. So all the relevant SA will be applicable when I'm doing the planning and performing of the audit. And again, when I'm reporting, SA 700 will also be applicable. But there are certain specific criteria when it comes to the reporting. That is, I am required to issue separate opinion on each engagement. That means, let's say, for example, I was hired by management to conduct audit of a complete set of financial statement plus audit of single balance sheet also. Can I issue the opinion together because complete set already contains my balance sheet? Answer is no. Issue separate opinion for each of the engagement. Reporting on complete set versus on a single set. These two are two separate engagements. If the same auditor is performing these two engagements together, he has to issue separate opinion. Now, what if the management is issuing together? Like, management is not issuing separate balance sheet, as per the engagement. In that case, if management is doing that, like, they are not issuing separate balance sheet or not disclosing or not publishing, on which you are issuing a separate opinion, ask management to disclose separately. If management is publishing this together, which does not differentiate sufficiently both, then ask management to rectify the situation so that auditor can differentiate the opinion. Otherwise, do not issue the opinion. Simple. Until and unless you are satisfied with the differentiation. Clear? So, if management is not separating both of the scenarios, both of the engagements, and reporting like under both of the engagements, do not issue opinion. Clear with me? Clear? Till now? With me? Yes, no? Yes, Abhirakesh, there are cases when, management will ask you to issue separate opinion on a particular set of a particular financial statement vis-a-vis separate opinion on the complete financial statements. Those are scenarios. Let's say, for example, there is a misstatement in cash flow statement. Okay. There is a material misstatement in cash flow, because of which you have issued qualified opinion on the complete set. But when you were only issuing opinion on the balance sheet, there was no misstatement, because misstatement is only there in the cash flow. At that point in time, you might issue unmodified opinion for the balance sheet. So two different opinions for different set of financials. That is like one where you have only balance sheet, on the other hand, you have a complete set. So management may ask you to issue different opinion and, for a complete set and a particular financial statement. Now that is a scenario. If you have a modified opinion, EOM or OM paragraph on your complete set of financial statement, you need to understand how it is impacting your standalone financial statement report, single financial statement report. not the standalone, but single financial statement report. The reason, because let's say, for example, there is a modification with respect to cash flow or modification with respect to P&L, and I am issuing opinion on single financial statement, that is balance sheet. Whether that modification is going to impact my balance sheet, or let's say there was a EOM paragraph, okay, highlighting some specific disclosure in the P&L. So am I required to repeat that EOM paragraph for the balance sheet? So you need to understand the impact of that modified opinion, EOM, OM paragraph of the complete set of financial statement in relation to the single financial statement reporting. And accordingly, you need to determine whether the same will appear here or not. Now, usually, if you are issuing adverse opinion or disclaimer of opinion on complete set of financial statements, adverse opinion or disclaimer of opinion, I'm not talking about qualified. In that case, SA 705 does not permit to issue unmodified opinion on single financial statement. So SA 705 says that you are not supposed to issue dual opinion. Okay, two different opinion on the same financial statement when there is an adverse or disclaimer. Because in case of adverse or disclaimer, we say that the misstatement is material but pervasive, means it is applying to the majority portion of the financial statement, or it is having impact in the multiple items of the financial statement. Okay, so that's why SA 705 does not permit you to issue two different opinions. However, auditor can still go ahead and issue different opinion if the 3P condition is satisfied. What is PPP condition? The PPP condition is not prohibited by law. So law is not prohibiting. Perfectly fine. Okay. Audit report is not published together with the audit report that is containing adverse opinion. So adverse opinion and unmodified opinion should not be published together. So not published together, not prohibited by law, and does not, make it that the specific element which you are auditing separately does not constitute a major portion. So it should not be a major portion of the entity's complete set of financial statement. If it is not the major portion, it is not published together, it is not prohibited by law. If these three P's are satisfied, PPP condition, then you can issue a separate opinion, that is fine. Otherwise, you cannot issue a separate opinion, okay, or different opinion rather, okay, on the single financial statement when you have a adverse or disclaimer of opinion on complete financial statement. Clear? Any doubt? Viraj, it is basically just the logic that you need to apply. Trust me, the subject works on the logic. There is nothing apart from the logic. And it is pretty much logical that, okay, on one hand, I'm saying that complete financial statement are, materially misstated. There is a lot of misstatement. On the other hand, when I'm issuing opinion on the single financial statement, I'm saying it is perfectly fine. Contradictory. Logically, it does not set. So everything in this subject works on a logic. If you understand the logic, it is pretty much easy. So there will be no reason to fear about the subject. Rather than just mugging up, understand what is the logic, why this particular thing is prescribed in this way. If you will ask the question why, if you understand the logic, it won't be a difficult scenario. Trust me. Also, I will suggest please go through of the lectures which are uploaded on the portal. They are very good lectures. Trust me, they will enhance your understanding because these are the summary lectures, okay, revisionary lectures we are doing over here. But those are the detailed ones where we have discussed everything in detail. So I request, please go through those lectures first. And before coming to any of the revisionary session like today, please go through the lectures of that chapter, so that okay, you will have a good understanding when we are discussing things in the class. Clear? Any doubt, guys? Any doubt with respect to SA 805? Pretty straightforward, logical, nothing difficult. Any doubt? Okay. If no doubts, let's proceed further. SA 810. Engagement to report on summary financial statement. Okay. Summary financial statement. Now, can anyone tell me what is summary financial statement? We saw special purpose financial statement. We saw single financial statement. Now, what is summary financial statement? These all are special cases. Anyone? What is summary financial statement? Abrakesh, half of the portion is correct. What is summary financial statement? Okay, so when I talk about summary financial statement, it is kind of the aggregation of the complete set of financial statement. Means I'm summarizing the financial statement. I'm concising, making it small. For example, instead of reporting everything in detail, schedule wise and everything, I'm just, reporting sales, operating expense, gross margin, other selling and administration expense, net profit, taxes, profit distributable to this shareholders. Or in balance sheet, I'm reporting as a non-current asset, current asset, this side equities, non-current liabilities, current liabilities. That's it. Or to, like I'm converting a complete set of financial statements into summarized form. So I'm creating a summary of a financial statement, of a complete set of financial statement. By concising, or you can say by aggregation of the complete set of financial statement. The term we use over here is the aggregation of the financial statement. We do an aggregation. Are you getting my point? So when I prepare a summary financials, when management prepare a summary financial statement, they might require us to audit also. And that could be, they might have to submit to either banks or some investors or someone else. Okay. So they might require us to audit that summary financial statement. And in that case, asset 810 will be applicable. Now, there is one important point with respect to engagement, acceptance of engagement. So this particular essay again talks about on three areas. One, when to accept the engagement, how to accept the engagement basically. Okay. Second, how to form an opinion and evaluation of the conclusions. And third, like basis for the opinion, writing the appropriate basis for the opinion. Now let's talk about first part, that is the acceptance of the engagement. And there is a very important condition that if you are not auditing the complete set of financial statement, okay, then do not accept the summary financial statement engagement. So auditor shall accept an engagement to report on summary FS only when he is engaged to conduct an audit as per the SA, okay, on the complete set. So if you are auditing complete set, then only accept the engagement on the summary set. Otherwise, not. So if auditing complete set, then only accept summary financial statement. Okay. Or I would like to, here is a complete financial statement. If auditing complete financial statement, then accept audit of summary financial statement. Otherwise, do not accept. Once you accept, let's say you are also auditing the complete set and summary, then in that case, understand what is the applicable criteria. Now, what is the criteria? Here, the criteria means simple, like how much concise, how much aggregation is required to be done. Am I only required to show at the non-current asset level, or there is a bifurcation, further bifurcation required in the non-current? Am I only required to show at the top headings, second level headings, third level headings? How much detail or how much concise is required to be done is the applicable criteria. Whether applicable criteria is acceptable, is appropriate in the scenario, yes, you need to determine that for that audit. And then you need to agree with the management. What you need to get agree is preparation of the summary FS is responsibility of management. Management will make available the audited financial statement to whom they are submitting the summary financial statement. Because you cannot understand the detail only by the summary. You cannot understand the detail only by the summary, and that's why the users should get the audited complete set of financial statement along with the summary financial statement, or provide them, okay, where is the complete set available? So if they want to see the complete set is on the website on this particular link. Okay, but that should be there with the summary financial statement. Okay. Then if you are providing the audited financial statement along with the summary financial statement, also provide auditor's report. That is also necessary. Okay. And agree with the management that how you are going to prepare the summary financial statement. So pretty much straightforward, you can say that include the auditor's report, include the complete set of financial statement with the summary financial statement, and agree the form of opinion on the summary financial statement. Clear till now? And there is one doubt that what if the auditor accepts the engagement of a summary financial engagement when he is not auditing, the complete set? In that case, he will be not complying with the requirement of a SA, and that could result in a professional misconduct. Clear? Any doubt till now? If management does not agree to on these terms, if management is not providing agreement to these particular terms over here, okay, or management says that, okay, I don't have a criteria, or criteria is not acceptable, you find issues in any of these terms, in that case simply do not accept the engagement. If any of the agreement is not able to be finalized with the management, you are unable to finalize the agreement, or you are not able to apply the applicable criteria, or criteria is not acceptable. Okay, for example, management says Only show total asset, total liability. That's it. Do not show equity. Summarize in a way which is not appropriate, which will not give a clarity to users. Rather, it will confuse the users. For example, they are asking you to prepare financial statement like this way: equity, liability, okay, then uh, non-current assets, non-current liabilities, current asset, current liabilities. They are asking you to prepare in this way. So only equity this side, rest everything is this side. Summarize in this way. So this will create a confusion. Okay. So I would say this is applicable criteria which is not acceptable. Simple. And hence I will not accept the engagement. Now, what if the law still requires you to accept the engagement? In that case, if law mandates that, okay, please accept the engagement, you cannot withdraw it, conduct the audit as you are supposed to conduct, but do not write that this audit is conducted as per the essay, because you are not required to follow. Because in the current case, you are not able to follow the essay. If you are not able to follow the essay, then why should write? Why we should write that, this is conducted in accordance with the essay. Essay says you to withdraw, but law says you, okay, continue. Now, law, we need to comply with the law, and we cannot comply with the essay, we cannot withdraw. In that case, do not write in your audit report that this audit is conducted in accordance with the essay. Do not. Simple. Clear till now? Okay. Now comes the next part: nature of procedures that are required to be performed while auditing the summarized FA. And that is pretty simple. The way you audit your normal FS, it is a similar. Okay. It is a similar way that you need to audit. So relevant, procedures will be applicable over here also. So evaluate whether FS is adequately disclosing the summarized nature of the audited financial statement. Basically, it is a reflection of the completed financial statement, complete set of financial statement. So it should reflect that the summary of the complete set of financial statement. Okay. And if it is not reflecting or it is not accompanied, then you need to provide that particular detail in your report. Okay, this is not proper, this is not an appropriate summary, and accordingly I am issuing qualified opinion or adverse opinion in my report. Okay, and for that, when you are auditing the complete set and the summary set, how will you identify whether the summary set is appropriate or not? Can anyone tell me? If I tell you, okay, audit the summary financial statement, and this is the complete, this is the summary, how will you say that, okay, the summary is appropriate? What you will do? If I ask you, okay, this is a summary financial statement, okay, this is the complete set of financial statement, tell me whether the summary is appropriately prepared or not. How will you say that? How will you identify that? Whether the summary is appropriately prepared based on this complete financial statement. What you will do? Basically, you will compare. Like, okay, this is a complete set, this is a summary. I will compare. Okay, this total here, it's one line item here. This total here, this is one line item here. I'll compare both of the financial statement, correct? And I will check whether the aggregation, the applied criteria is appropriate or not. By this way, I will be able to say, okay, the summary is appropriate or not. That's the thing only standard requires you to do. So standard says that, okay, check whether other applicable criteria or applied criteria is appropriately disclosed. Compare the summary FS with the audited FS. Check the appropriate level of aggregation. and then conclude whether unmodified opinion or not. Simple. And if you are issuing unmodified opinion, then any of the paragraph you can issue that the summary financial statement are consistent in all material respect with audited financial statement, or you can use this particular paragraph. Summary financial statement are a fair summary of the audited financial statement. Pretty straightforward, simple. Any doubt till now with the summary financial statement? Any doubt? Problem arises when there is a different wording which are prescribed by the law. So if law or regulation prescribes different wordings for the opinion, which might create a misunderstanding. And okay, in that case, understand, can I provide additional explanation? If the opinion wordings which are prescribed by law, if you think can create misunderstanding, then whether you can provide additional information to remove that misunderstanding, to mitigate that misunderstanding. If yes, then provide, matter over, chapter closed. But if not, if you cannot issue that additional information, or even after issuing additional information, the misunderstanding might be there, do not accept the engagement or do not issue the opinion. If you cannot mitigate the misunderstanding, do not accept the engagement or issue the opinion. And still, if you are required by law to do so, then simple. Do not write that this essay has been conducted in accordance with essay. Do not write this audit is conducted in accordance with this essay. Reason because essay is asking you to withdraw when you cannot remove the misunderstanding. But law is requiring to do so. So as a result, you are not following essay. Do not write that conducted in accordance with essay. Simple. Now, when it comes to date part of the particular, audit report on the summary financial statement, please do not date before the complete set of financial statement. So how the process is, first you will prepare the complete set, then you will prepare the summary set. How can I date the audit report of summary set before the complete set? So first audit report on complete set will be there, then the audit report on summary set will be there. So date on the audit report on the summary set will be later than the date on the audit report of complete set. This is audit report of summary financial statement will be later than the audit report date of the your applicable or actual financial statement, audited financial statement. And also write in your audit report that, these particular, let's say, for example, I'll give you an example. Let's say you issued date of audit report on complete set is 25/2024. Perfectly fine. Okay. Now date of audit report on summary financial statement. Now you are preparing you are auditing the summary financial statement and you are issuing the audit report on 39/2024. Because later on, once you audited the complete set, then management came to you, please also audit the summary set that I have prepared. And now you are issuing opinion on 39/2024. So in that case, you need to write that events occurring between these two dates, that is a date of audit report, okay, events occurring after the date of audit report. Events occurring after the date of audit report are not considered in summary financial statement. Audit report of summary financial statement. How will you consider? I am preparing summary on the basis of audit report, audited financial statement, complete set of financial statement. If the complete set of financial statement was audited and everything was done and dusted by 20th May, now I'm just prepare. I'm comparing the summary. I'm auditing the summary of the same. How will I include the events from the May till September? Not possible. I cannot alter that. As a result, I will mention events occurring after the date of audit report till the date of audit of summary financial statement not included. Clear? So do not reflect the events that occurred subsequent to the date of audited report on the complete set. Simple. Any doubt? And what should be the format of the summary financial statements audit report? So this should be the format of the audit report. That is simple. TAI means title, addressee, and introduction paragraph. In the introduction paragraph, you need to follow SAADOS. That is, you need to provide what is a summary financial statement. Okay. Identify the complete audited financial statement. Okay. And what is the auditor's report on that particular auditor's audited financial statement. So SAA, summary financial statement, audited financial statement, auditor's report on audited financial statement. Now DOS is a date of audit report of the audited financial statement. What was the opinion of the audited financial statement? And they do not reflect subsequent events. So DOS. SAADOS. Summary FS, audited FS, auditor's report on audited FS. Date, opinion, and subsequent events. That is a SAADOS in your introduction paragraph. Then you need to provide MR, management responsibility, AR, auditor's responsibility. So this MR is a management responsibility, AR, auditor's responsibility. Now then O is your opinion on the summary financial statement. Your opinion on the summary financial statement. SMF and DP. SMF is nothing but signature, membership number, FRN, firm registration number. And DP is a date and place. Simple. TAI, that is title, addressee, introduction. MRAR, management responsibility, auditor's responsibility. Opinion, SMF, that is a signature, membership number, FRN number, and date and place. Then that should be the format of the summary financial statement. Audit report on the summary financial statement. Any doubt till now? Any doubt? Clear that how we need to issue report on the summary financial statement and how we need to audit the summary financial statement. It's logical. There is nothing, that is we are discussing out of what we have not learned till now. Simple. We are applying the same concepts, but by just modifying a bit. Because here we don't have a complete set of financial statement. We have a summary financial statement. Any doubts till now? Any doubt, guys? If not, shall we take a question? Shall we discuss a question on SA 800 series? Okay. So, Sustainable Solutions Limited is a leading manufacturing of eco-friendly construction materials committed to minimize its environmental impact and promoting social responsibility. The company has option to prepare its financial statement in accordance with Global Reporting Initiative Standards, GRI standards, or Sustainability Accounting Standard Board framework for its investors. Now, again, remember, it is for the investors, not for the normal compliance. Both are widely recognized frameworks for the sustainability reporting. Okay, fine. APP and company has been engaged to audit sustainable solutions special purpose framework based financial statement for the year ended 31st March 2024. During the audit phase, APP identified the management chose GRI standards as a framework instead of SASB framework for the preparation of special purpose financial statement. You as an engagement partner kindly guide the audit team with regards to the auditor's responsibility when management has a choice of financial reporting framework in preparation of such financial statement. So management has a choice. They can choose GRI, they can choose SASP. They chose GRI. Now, what is the auditor's responsibility in this scenario? Pretty straightforward and simple. Don't think it is a complex one. It is simple and straightforward. Simple and straightforward. Okay, Abrakesh. Yes, good. But there is a different answer, not this one. But yes, in this case, we usually don't do that. That is not actually feasible, practically feasible. Anyone? What is the role of auditor over here? Logically, if I go in this scenario as an auditor, I will ask management two things only. Number one, why GRI and not SASB? Simple. First question, why GRI? Why you are not going with the other option? Number two, which option is more suitable? Or in other terms, if I talk about whether applicable financial reporting framework is appropriate. Simple. Whether GRI is appropriate in the scenario. Yes or no. I'll ask, I'll check this one. And how will I check whether it is appropriate or not? Simple. Again, PUA. What is the purpose of financial statement? What is the users? Who are the users? And third one is the applicable criteria. If I give answer to this PUA or acceptable criteria, okay, if I answer this PUA, I will be able to answer whether this applicable financial reporting framework is appropriate or not. And the second question will be with the management, why you are choosing GRI? Why not SASB? So these things, this is the responsibility of the auditor. like to understand this particular two topics and accordingly to report in your opinion. Not much difficult, straightforward, simple, logical. Any doubt? Any doubt, guys? Okay. If no further doubts, guys, I will request you, please, before we start in the next lecture, before in the next lecture, before coming to the next lecture, I would request, please go through the lectures which are there. We will be discussing chapter 9, and I will be taking one or more two questions on this topic, chapter 8. Okay. Then we'll discuss chapter 9 and 10 on a similar lines. But please refer to the lectures which are already uploaded. They are the detailed ones. We are discussing the summary revision chapters over here. We are doing the revision, but please go to those details one. Please. That is really important. And I want maximum participation from your side from the next class, because that is the really important part where you will learn by providing the participation. Trust me. Also provide your feedback, guys. That is really important for us. And it is really important to understand what additional things you need, whether you are liking this or not. Okay. So do provide your feedback. You can provide on the portal, BOS portal. You can provide through app also. Okay, BOS app. So please do provide your feedback. That is really important for us. Okay, guys. If no further doubts, if no further questions, then thank you, guys. Thank you for participating in today's session. I will see you in the next session.
Thank you very much, sir. Ashok ji, thank you.
Thank you.